Monday, and I want to bring in Rockland Trust Vice President Portfolio Manager Rachael Aiken, and Rob Luna's back with us as well. Rachael, let me start with you. First, the market here, this is a pretty big pullback, a lot of confusion perhaps more than anything else. What's your assessment of how we're finishing this week?
So it has definitely been a week of surprises, and we see really two different messages across the market. When you look at the fixed income markets, we've seen rates across the board drop. A slight inversion of the yield curve this morning when you look at 3 months versus 10 years, and that's created concern that perhaps that is predicting a recession maybe down the road. But when you look at the other side of the coin in the equity markets, we've had a 1,000-point round trip on, actually 10,000 on the round trip for the Dow Jones Industrial Average. And really what we're seeing there is what we've talked in the past as a Goldilocks scenario with low inflation, low interest rates that are going to be low for a long time, and also growth that is moderating, not stalling. So Rob, I think the market's trying to digest.
Okay. Rob, do you think then the Goldilocks could be too much of a good thing? It feels like, golly, everything that you would want as an investor, we got it, and then you have to wonder why at one point today we were off more than 400 points.
Yeah, potentially. I think when you run out of that wall of worry for the market to climb, Charles, this is kind of what you get. People start getting a little bit nervous, looking back over their shoulder to see what's coming next. And I think that's what we're at right now, where people are really trying to digest these big gains we've had year to date and see where we go next.
Rachael, where do you think we go, and what will sort of be the catalyst, or what rights this ship now that we've got this sort of fog of confusion?
Well, I definitely agree that after the moves we've seen in this quarter, that it is ripe for investors to somewhat have the consolidation time frame, take some profits, and look for what will be the next catalyst for a leg up. And what we're really looking at is what will the first quarter earnings season tell us, and tell us more specifically under the hood, what will be the difference in revenues and earnings from companies that have more exposure outside the U.S. than inside.
I want to jump on that because the Russell, which is a domestic indicator, has been taking the biggest brunt of the hits here. So, and we saw Nike getting hammered over what was really not a bad earnings report, Rachael. So, I mean, if you miss in this next upcoming earnings season, it looks like there's going to be hell to pay.
There is. Many stocks right now are priced for perfection. And again, you can meet both revenue and earnings numbers and have some negative tone to your guidance and, as you said, get really hit. And I think that's going to be the issue for many companies. But when you talk about the small caps, I think it's interesting to look at how they haven't participated as strongly as our large cap brethren, and also to think, what does that tell us perhaps about business sentiment, as well as what the economic environment is here domestically as well.
Rob, I just got 30 seconds left. One of the bright spots today, home builders. We had a surprise there on the housing front. Could we see a market that seeks value, that looks for these opportunities to buy stocks that have already not participated?
Yeah, I think you have to, Charles. Like you're saying, the valuations right now are a little bit stretched in a lot of areas on the market. So I think when you hear things like the Fed cutting interest rates, the natural place is home builders. We saw existing home sales were actually really well ahead of expectations. So I think people are going to start looking at those stocks that haven't participated, and maybe even like the small caps. And I think, Charles, actually just talking a second about those small caps, the way the market's being played today, so many people are in the ETF game. So much of the big volume is moving into the big, large cap ETFs. Right. And I don't think it's anything to be said too much about that with the small caps being left behind. I
got you. That's sort of the passive investing thing. Rachael, exactly. Rob, thank you both very much. Appreciate it.
Thanks, Charles.
Thank you.
Well, folks, we've got just 9 minutes left in the show, and the Dow has come. This is the best that it's been since we began. But we know there's been a combination of things.